Hope Channel, changing lives.
Chamber. I know it's been long, but yes, we have finally returned with season 6 of your most favorite law education show, The Law Chamber. Welcome, viewers, and as we know, we usually start the season with our Q&A session. So today, as your guest host, Ajwa Poku, I am coming to you live with our Q&A session from our previous season, being season 5. And the Q&A session is going to be on the law in business, financial accounting, and auditing matters. And so for our business owners and for our potential entrepreneurs, I'm sure this session is really going to be helpful for you. As we all know, every business has its consequences when you do not pay attention to the legal matters surrounding it. And so to start the session, we have with us guests from our previous season, and I'm sure we took something from them the last time, so we are privileged to have them this time around to be with us again. Our first guest is Mr. Kumi. I'll have Mr. Kumi introduce himself briefly and tell us what's new from the last time we met him.
Thank you so much. The last time we met, we discussed various things on accounting and how it helps businesses, how businesses should take advantage of the accounting, opportunities that will help them put their businesses in shape and actually attract investors, and then also help them with compliance, with regulatory compliance and other things. Those are the main things that we discussed the last time.
All right. Thank you very much, Mr. Kumi. So as we know, Mr. Kumi is a managing partner and founder in an audit firm which is called Diverge. Yes. Right. And he provides assurance, tax and advisory services for businesses and other organizations. He is also a financial consultant and an auditor with over 15 years of experience. Mr. Kumi, today, dear, you really have to delve deep into these matters. He's a managing partner and helps with SMEs navigate regulatory complexities. And before founding Diverge Ghana, he was a senior manager at Mazars. Yes. And a co-founder and partner at EKAJ Associates. I can go on and on and on. I just want you to understand you're in good hands today with the legal advice you'll be getting. On our show again is our very own Ruhaina Razak, right? Yes. All right, Ruhaina, so tell us what's new this time around from the last time we met you.
Okay, so as Frank started off touching on the accounting bit, I think what we also touched on the last time was to look at the importance of auditing for small businesses. Although it's an area that is not really being focused on for small businesses, but we did highlight the importance of auditing in businesses and also how small businesses can do auditing in their own small way and how they can actually grow the business through some auditing practices that we touched on. And I'm sure pretty much today what we'll be doing is to go through their questions and try to provide some deeper insights into what they actually want to know around accounting and auditing.
Okay, like she rightly said, if you want to know anything around accounting and auditing, this is the place to be this time right now. Ruhaina is a chartered accountant and currently a manager with KPMG with focus on governance, risk, and compliance. Yes, she is also an experienced professional with a solid background in accounting and finance and also proficient in financial analysis, budgeting, financial reporting, and risk management. So if you want to know how to evade the risk in your business startup, best believe Ruhaina is the best person to speak to. And as we know, we are still looking forward to have your questions answered on anything regarding starting a business, the financial analysis you have to do, the budgeting, and everything that has got to do with auditing. You can send in your questions. We are live on Facebook, we are live on Hope TV, we are live on all our other social media handles. You can also follow us on the Law Chamber Ghana. And yes, it's good to have you again. It's good to see you again. So I'll dive right in, Mr. Kumi. So when we say a contract, what basically is a contract, and what's the need to know about contracts in a business setting? Right.
So a contract is an agreement that is enforceable by law. In its simplest term, is just an agreement between two or more parties that can be enforceable, or that will have intention to seal or bind, the various terms in that contract. So in business wise, as we are discussing, businesses will go into contracts where they would want to perform certain obligations for each other and for various considerations. I'll come to the elements of contract, but these are key things that people go into an agreement for. And usually, for it to be binding or to be enforceable in court, you have to make that clear in the contract. And let me just say also that it need not to be documented, although it's safer and best or advisable to actually document the terms of your agreement in order to hold one accountable where there's a default. So that's what I'll add to it.
Okay. And so in the world of business, we also hear about agency and how sometimes we can get people to be acting on our behalf for some businesses. And so if I have, Ruhaina has asked me to be maybe cutting some deals on her behalf, and we have put it down in writing as an agent, and as that contract put down, I mean, what's the line we can draw between the agency or the loan agency and then the contract?
Okay, so agency itself, I would say it can be a contract. So agency is only a relation between a principal and a third party, where someone would act on behalf of another person. That another person is a principal. So that agent usually would not be acting on his own accord, but will be acting on behalf of his or a principal. But of course, there are different forms of agency which will come into later on.
Okay, so speaking of...
So that is about agency. But a contract, like I said earlier, is an agreement to do something or otherwise between two or multiple people. Yeah.
Okay, let me just come in briefly. Frank, pretty much that we are aware of that the agent will be acting on behalf of the principal. But if the agent should do something on his own, it becomes binding on the principal.
Yes, to an extent, because there are cases where we can say that the agent is on his own frolics, right? So let's say the agent has expressed autonomy, or maybe derived some power, or we call it power of attorney.
Yes, to act.
Or autonomy to act on behalf of the principal. And that is understood that whatever he does, he's acting on behalf of the principal. But there are cases where you have the agent going above and beyond his limits to do certain things that the principal would not, rectify. Then that becomes a different problem.
But pretty much true. Sometimes we can have some inferences because there's this perception. So let's say you work with Frank and I pretty much deal with you. It's unfair that whatever you do, it becomes binding on Frank. Okay. So if you take money from me that you want to supply goods to me and the agent runs away with the money, you realize that we tend to go back to the principal to do what? To deliver what was in the contract or whatever agreements I had with the agent. So as Frank has said, that's why it's pretty much important that when you are dealing with agents, then it should be clearly stated, and also whoever the agent will be dealing with should be pretty much aware of what the agent's limits are, so that he or she will be aware of what kind of dealings he can have with the agent.
All right. So this also, that's actually a good point. And so if regularly Frank is going with me to our suppliers, they see me following Frank, even though Frank has not expressly said that, oh, Ajua or Diana is my agent or she's working on behalf of me, by virtue of taking me with you always and not saying anything contrary to that, it can be implied that
you are his agent, so they can.
So in that moment, they can have a contract with me,
yes,
thinking they are still having a contract with Frank.
What I would say to that is that as business people, we need to be very circumspect about how we deal with these things. The fact that you go with me to maybe execute a contract all the time does not automatically mean that you can stand in on my stead, right? Let's say you are my associate, right? And we go to meet clients and to do business, and then one day I'm not around and the client meets you to sign a contract with you on my behalf. That would not be binding unless I communicate such to that client, because automatically you are not a signatory to the contract or to the relation that I have with such a person. You understand?
I get you.
Yes. So that has to be stated very clearly, and so therefore that is why we need to be very circumspect. You cannot just infer because you see someone with another person, then therefore that person can be a qualified agent.
Okay.
Yeah, so just to add on to that, so that's why it's good, as Frank has mentioned, that when we are dealing under those circumstances, it's important for you as a business owner to let your clients know this person can do ABCD on my behalf, so that it's clearly stated. Now, let me just give a classical example. We see instances of some of these susu collectors who come to us, take money. For me, in my mind, I'm giving my money to the microfinance company. So if the collector runs away with my money, I'm going straight to the microfinance to take my money. So you see, under that arrangement, once I know the susu collector who comes to take the money is the agent, if anything should happen, then it becomes binding on the company. So it's important that as business owners, we do communicate that clearly to our various clients, so that they are pretty much aware of what exactly the arrangements are, so they don't wrongly infer on such instances.
Yeah, and I'll add one more point. In a situation where maybe, let's say in the case of a susu collector, turns rogue and runs away with the client's money, what usually or is ideal that the susu company does or the bank does is to immediately issue a statement, a public statement, to establish the fact that so person is no longer maybe wanted or no longer working with the company, and therefore if you work with him or do any deals with him, it's at your own risk. That gives public statement, and that will inform you that you shouldn't deal with such a person henceforth.
All right.
Yeah.
So in the world of business, ignorance of the law is never bliss. It is expensive. So if you are trying to invest in your business and thinking making savings with a microfinance, so doing so through an agent is a way of safeguarding your money. You should know you are in for a long haul. And so now, talking about saving money or saving with these microfinances, there are all ways by which businesses tend to want to invest in their business. And so when it comes to this whole term about starting a business and getting investors and capital, who exactly is an investor? And the concept of investing into a business, why should business owners even be concerned about that?
Okay, so layman term of who an investor is basically somebody who wants to invest into a business for profit. And so for profit meaning that he wants to invest in terms of, so there are two types, so either for equity or by way of debt. So for equity means that I'm putting my money in and I want to be part of the business. So I'll take a share, maybe 30%, depending on what kind of arrangement you have. Or for debt, it means that I'm giving you the money, but I expect you to pay me back with some amount of percentage. Now for investors, typically when they want to invest in businesses, they want to see how viable the business is, because of course nobody will want to invest money into a business and nothing comes out of it. So typically they will want to check if your financials are good, if you have a solid business plan, and if the controls, everything around the business is great before they would want to invest in such a business. And that's why we usually hammer on the importance of having a good financial statement as a business, why it's important to record your transactions, because when investors are coming in, they want to see how viable your business is, and the only way they can do that is to look at your financial statement, see how you are growing, and if you have potential before they would typically want to invest in such a business.
Right.
Yeah. To add to that, I would say that, like I said, an investor basically is anybody who is looking to, multiply his money, his capital. So therefore, he would put money in a business, hoping to, gain some return after some time. So she really said that there are two types. I'll bet to add one more, which is a mix, debt and equity and a mix. Sometimes where the business is actually a startup company or a startup business, you see that they need some, some space, some time that they can, grow with. So therefore, businesses will not only put equity, they'll put maybe debt, but with some caveats. We can refer to some of them as safe agreements, where you put in money for the businesses to grow on, then when it's gaining ground, then you now convert to equity, and with that you are not expecting interest in the short term. So all of that is, types of investment that one can do.
All right. And so that was the lesson we had on investment the last season, and then what has still been added. Now moving away from investments and then delving into accounting. Why is accounting necessary for businesses? Why do they need to be concerned with accounting?
Okay, so as I started off earlier talking about what investors would typically look for, so it's important that you record your transactions as a business. Now, even as a business, it's good for you because you are able to see how you are financially growing, what's your financial health, do you have enough assets, what are your liabilities, what do they look like, are you growing as a business? Because from year on year, we do business, but we want to see how we're actually growing. And that can only be translated in the financial statement or how you've recorded it, where you are clearly able to see how you're growing as a business. Now, another thing or the importance of recording transactions is also for the investors, because typically when they come in, you're not going to tell me by mouth that, oh, I'm good, I'm strong, I have strong profits. Where is it? I need to see it. I need to see it on paper. How have you grown over the years? If I invest my money, will I be able to get my money back even with profits? So that's also another importance of having the transactions being recorded accurately. And also for tax purposes, because at the end of the year as a business, we are supposed to file our returns. You need to upload your financial statements into the GRA portal for GRA to see how you are performing and what kind of taxes you can pay as a business. And also businesses typically who are seeking to get loans from banks, the banks obviously, that's what they're going to look out for, because they are not there with you. They want to see it on paper. How do your financials look like, and will it be prudent for them as a bank to invest in such a business? So typically that's why it's important for us as businesses to have our financials recorded.
Is it just me, or it entails a lot? Because from trying to look good in your books and then also trying to not overspend and be able to prove to an investor that, oh, I am a viable business. I mean, typically for startups, what's the landscape like here in Ghana? So I'm trying to attract someone to come and invest in my business. I'm in Ghana, I'm not outside. What are some of the things they are able to, what are some of the practices they are able to portray in their operations to get these investors to invest in them?
Okay, so I will take that. I'll first add on to what she said. Accounting is the language of business, basically. You in auditing, I would say in auditing, if it's not recorded, it's not done. We can say same for accounting. If you don't record, then what story are you going to tell about your business? You need to be able to record your transactions. You need to be able to classify them properly. Maybe I want to be able to break down this what we are trying to communicate here to anybody out there who is maybe an entrepreneur or a business owner, to understand what we are trying to talk about here, because I see that there are many businesses or business owners that do not understand anything about accounting.
Yeah.
It is until the end of the year where they need a loan, or GRA is chasing them, or there's some compliance or regulatory matter that they come running looking for an accountant.
Okay.
But but
until then,
all year
I
round.
can do
There's
my
no records.
bookkeeping
Yeah.
myself.
Some people don't even record at all.
Yes. So all year round they are just going
But
about
is it not
their
because you're
business.
expensive?
No,
Oh,
Yeah,
but
sure.
we are not expensive. I can tell you. I will say, let me retract that. We are
Okay.
affordable.
Eh,
We are
affordable can be
affordable.
relative,
Yes. And so expensive too can be relative.
Well.
But we are affordable.
Okay.
But the thing is that people don't look out for an accountant. It's like they put it on the back burner and wait till something happens before they come looking for an accountant. By which time the harm has already been caused, and then they are not at that point. They are not looking for an accountant. They are looking for
Somebody
a bookkeeper,
to
just to
save the situation.
exactly.
But wait, I'm coming. Let's draw this. What is the difference between an accountant and a bookkeeper?
Okay, so a bookkeeper keeps your records.
Okay.
An accountant does more by interpreting the figures, by communicating the figures, what they mean, and also analyzing, and
Okay.
so it's not just the recording. The recording, we can say accurate recording is for the bookkeeper. The accountant goes beyond accurate recording by interpreting, by summarizing, by communicating
Okay.
to the various stakeholders.
I see.
Yeah.
I see. So with that mentioned,
and
okay.
also, implementing strategies that will help your
Yeah.
business. Yeah.
So I was going to add, sometimes you're able to also predict.
Yeah.
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 Okay.
Yeah.
Right. And so with that mention about the fact that sometimes you only come running for the accountant, sorry, where we run into trouble. What are some of the basic legal issues we should look out for in accounting for a business?
Okay. You want to take that?
Oh, you can start.
Okay. So basic legal
Issues.
issues.
Yeah.
So first of all, in accounting, basic legal issues, we are talking about compliance, number one, because compliance, if you don't comply, is cost to you.
Okay.
You might think compliance is expensive, but wait till you are found to be non-compliant. It's much more expensive. So legal issues, compliance, and then also ensuring that you are following through with your commitments. So you have contracts with various third parties, with your suppliers, with your customers, and so on. You follow through. If not, you're going to be sued. If you are sued, I can't my feet.
I see.
And so these are legal things that you have to consider when you're running a business, and not just in accounting, but running a business as a whole. In accounting, you see, when it comes to accounting, sometimes, especially in Ghana, like I was saying, people or indigenous Ghanaians, we don't prioritize the role of an accountant until there's an issue. So when signing the contract, we don't involve accountants. So things happen and you realize that you're actually losing out. So maybe you might get a lawyer, but you don't see an accountant. A lawyer might not be able to do what accountants will do for you.
Okay.
So the two are very important.
So we should usually consider both parties being available for some of the contracts
Exactly.
we get into.
Yes.
Interesting.
Yeah, because at the end of the day, once you pen your signature onto the document, it's binding. So if you don't read it properly and you just think, oh, I'm just signing a document for signing's sake, it comes back to bite you. So it's important that we thoroughly read the contract terms, and as Frank has said, have the accountant there to be able to explain the financial implications, because sometimes there are certain clauses that if you're unable to deliver, you're supposed to pay this amount of money. So it's important that the accountant is there with the lawyer to have, you know, both sides coming in to give their perspective. And also for the legal side of the accounting, it's also important to go through with the standards, because at the end of the day, whatever you are reporting has to be in line with the standard, and typically that will be what the accountant will be looking for to ensure that the business actually complying by the required standards.
So it's not just about us paying the taxes you are supposed to pay. It goes beyond that when it comes especially to the compliance bits.
Yes.
And so that would also lead me to, if as an accountant you are ensuring that I'm doing all these things in my businesses, then why do I need auditors auditing my accounts?
Okay, so if you have an accountant doing all these things, why do you need an auditor? The reason you go to get an auditor is to get a second person, a second opinion of your business affairs, right? So an external person who is not related to your business will have a fresh set of eyes to see what is happening in your business. So therefore they can give you an opinion, an independent opinion at that. You go through your books, they tell you your business is doing fairly well, it's proper and it's fair and good representation, as the auditors will say it. So then you now would have some comfort that your business is okay. But if you rely on the same accountant that has always been working for you, he might overlook certain things. He's also human. He might, might miss certain things that he perhaps would think that is not the case, but he might miss it, and therefore you stand a chance of having losses.
Okay.
And it can be by fraud or error.
Yeah. Typically, so fraud, intentional, error. It's not intentional, as Frank said. He's human, so he's liable to make certain mistakes. So just to add on to what Frank has said, so for auditors, it's important that they come in to give you the second opinion, but sometimes under certain circumstances, it's required for you to actually have the auditors to come in. So, for example, if you want to take a loan from a bank or an investor wants to invest in the business, he knows the accountant is probably with you in the business, or is, of course, somebody you might get in to come and prepare the statement. So you might typically tell him that, okay, let the statement look good for the investor, or let's look good for the bank. So the bank or the investor might want a second opinion. I want an independent person who should come in, look into your books, look into what everything you've reported, and give me an opinion if it's actually true and fair, and it's a document that I can actually rely upon. Now, that is it for external auditors. Typically, they are supposed to give some form of assurance on the financial statement to tell the other party using the statement that indeed it's actually true and fair. But we also have another leg of auditors, who are the internal auditors. So typically, internal auditors are with us in the organization, typically reporting to, if there's a board in the business, so they give assurance to the board that indeed controls are working, governance the governance is fine, the governance structure of the business is fine, and also there's adequate risk assessment being done. The risk management environment of the business is good as well. So for the internal auditors, typically they are within the business, typically giving assurance around controls, around risk management and governance, whereby the external auditors typically are giving assurance or verifying the reliability of the financial statement for the third parties or users of the report.
Okay, so so we know external would only or usually come in when we have investors trying to also get to invest in our business. So with the internal auditors, how often are they supposed to audit the business?
Okay, so typically for internal audit, it's supposed to be a periodic audit, more continuous audit, trying to awaken the control spirit within the business, letting people be alert that there are certain controls that have been constituted for us as a business. So we are typically supposed to do and implement those controls. So typically for internal audits is done on a quarterly basis for within the year. So the internal auditors will have the plan, share it with management, share it with the audit committee of the board, and once the plan is approved, it's being executed on a quarterly basis. But of course, looking at certain key risks within the business, so risks is being assessed, and then the internal auditor typically has a plan, and audit is being done on a quarterly basis. But for the external audit, is for the larger companies, they do it on an annual basis. So at the end of the year, the auditor comes in to check, or biannually they come in as well to check their financial statement before they come in at the end of the year to do it. But also, it might be on a need basis. So you typically want to do an investment, so they're asking you, just do the audit for this period for me and let me see how you're actually performing. So yeah, those are typically the different types of periods and for the various audits.
So she has touched on almost everything there, and that is actually impressive. What I would say is that there are different types of audit. There is internal audit, there is external audit. Now, auditors can provide different kinds of services, and that will include assurance services as a whole, where audit is part of that. So where there's an investor coming on board, typically the investor would want something called due diligence, right? So they would instigate a due diligence assignment to be done by an external party. Usually it can be an external auditor or someone else who has the competence and ability to perform that due diligence. So the due diligence will be done or performed typically by an external person to satisfy the needs of the investor. Okay. Now, the external audits can be in different forms. So, or I will say assurance. We have the statutory audit, which is commissioned by law. So that one, you cannot vary the scope of it. It's annual, and therefore every year it has to be done by every organization, and that one is done by external auditors, not internal auditors. Now, internal auditors, like she said, is done periodically, where they have the audit plan, they profile a risk register for the business, so they see various aspects of the business where they believe there are high risks or significant risks that they should look into and prompt management to actually take charge. And then they report to, if there is an audit committee, then they report to the audit committee, which is a committee of the board, and so on. So yes, that is all I can add to what she has said.
Yeah, you should have had a lot of notes taken down or something at the back of your head now when it comes to auditing a business. From what I have picked, regardless of the size of the business, first of all, you need an accountant. Even if a full-time working accountant, at least someone who would come in on a need basis to help you with your records, and then an auditor. And you never go wrong with an auditor. At least you're able to flag an issue and help you know where you're going wrong and then where you can improve on. nti ene de esua ni na se wo hye ejuma se fofra ene mani bia wo so ma weni ku ho ene enkrata sem ene akontebuo a oye wo ejumani se ejuma eye ketua enye ejuma esokra still behia accountant ana obi o mo friend say auditor ama waboa wo ama we hu niema wo se oye na eboa ma ejuma ni. We would go on a short commercial break. We'll be right back.
Mid-Central Ghana Conference of Seventh-day Adventist Church ewo Kumasi efri Bantama kosi Akomadan edi mfiedu ye nije ni osebo ohyehu fakese ewo Ohim RC School Park Memininda ehini mebosomelu mu ne da etosonan 4th October baafo kote kutin sramaya otosomienu breman hine ne hema eba dwumadi nu afi amanyofo atitire ni nyamemu asofo akukudam ni mpanyimfo akunyini eba dwumadi nu ase enu nti brebi na ye monka idum afodiensi asofofie enyi nhira emfiri erade ho ye hwani nse obeba.
Welcome to the consulting room.
And then there are the non-communicable diseases. These tend to be called the lifestyle diseases because the choices that we make as part of our lifestyle play a part in whether we are going to get it, how severe it's going to be if we get it, and the hope for recovery.
There are over thousands of viruses that causes common cold. But because we've come into contact with a lot of them, we've built a lot of immunity against some of these viruses. Because we've been on this earth for a very long time, we've come into contact with a lot of things, AIDS and other things. But for children and newborns who have just come into this world, their system is not that matured to build that immunity in there.
The other thing is that we also think of oral health as a problem of the rich. Okay, when you are struggling to put food on the table, who cares about seeing a dentist? So I think these are what may have contributed to us neglecting oral health.
Back and as you know it, we have started with season 6 of the Lord Chamber already, but before we delve into the season 6 proper, we are doing a question and answer session from season 5, and we are looking at how businesses need to pay attention when it comes to their financials, when it comes to accounting, when it comes to auditing matters. We have in our studio today Mr. Frank Kumi and then Madam Ruhaina Razak. I need right. to be I need to be very careful with how I go about that. And then thankfully Ruhaina is a chartered accountant, Frank is a managing partner. So when I say that today we are getting it just right. So we've looked at auditing when it comes to starting a business or even owning a business. We've looked at the need to have an accountant, the need to practice good accounting principles and standards. In all of this, how does it concern people living with disabilities? How does this help them?
Well, I would say that accounting auditing is neutral. It does not have any direct effect or implication for persons with disabilities, PWDs, right? Okay, so I would say it's very neutral. It doesn't have any effect. Only in that perhaps if we can adopt AI, right? AI will make things very easy for all of us. And perhaps if we are talking about maybe someone who cannot see very well, AI can be able to interpret whatever is typed or written, maybe in a way that making it easy for them to be able to access and understand, read it using the sign languages and, how how maybe
Braille.
a blind
Braille,
person.
yeah.
Yes, exactly. So maybe AI can help with all of that, making everything easy for all of us. But I will still maintain that accounting is very neutral. It doesn't have any biases against anybody.
All right, Johanna, anything?
Yeah, so just to add on to what Frank has said, as he said, so with the invention or the coming of AI, we are hoping that we will see more user-friendly, accounting softwares that can help. But of course, with the real where people who can see properly are able to read, it can still be done and explained to them, for them to be able to still have insights into how their financials are going as a business, and how business pretty much faring in terms of their financials. So whoever the accountant is, the person should just be able to interpret it properly for the person to understand what is going on with his or her business.
Okay. And yes, so accountants, they should also, basically what you have said, learning how to make it inclusive.
Yeah.
So knowing how to make it accessible regardless of your status as a PWD.
Okay.
Being able to get the information right when you need it, not having to travel far and wide to get some simple task done. And then the practices such that if they need to get a loan, the rules should be able to be
Inclusive,
accommodating.
yeah.
Exactly.
Yeah.
And so that's how our PWDs benefits from this education. And to wrap it all up, what
And
is
maybe,
this?
sorry, let me cut you short. Maybe training programs as well could be organized for them, to let them, understand how their financials are, how they can interpret it properly, so that they are also, part of the whole system.
Yeah.
Right, thank you very much.
I think what I will add to that is that maybe we look at it in the general business sense.
Okay.
Not maybe limiting it to accounting and audit or finance, but maybe how PWDs can actually own businesses, and manage businesses, because even regular folks in any economy struggle with getting employment. So maybe we'll shift the discussion to how we can make it easier for PWDs to be able to own businesses and manage businesses, and then maybe engage accountants to help them understand. So for example, let's say someone who cannot see very well would need to get an accountant that can communicate to him what the accounts or finance is saying. So maybe we can talk about that and then see how maybe help people own businesses, develop businesses for the economy, for the general good of the economy. I think is very important, because if you're going to be relying on gaining employment, someone else employing us, all of us, we are going to be disappointed in a long time. Yes.
Yes. So I think in all of this, that's how we can also help our brothers and sisters who are not as privileged as we are. And so, wrapping it up today, and for this episode, you have Frank, you have 5 minutes. Rehaina, you also have 5 minutes or less to advise us, as even with people who are not business owners, people who are employed, what kind of practices they can implement in their workplaces when it comes to the accounting, the financing, the investment and the auditing bits of a business, and for people who are looking to start their own businesses. And so, Rehaina, I'll have you go first.
Okay, that's fine. So for people looking to start, okay, so let me start with, I'll go into 2 lines. So people in business and people looking to start their business. Now for people in business, I think we've touched a lot on this. Irrespective of your size, it's important for you to keep records. As I mentioned, sometimes we go and the whole year the person has operated the person hasn't recorded anything, and you want somebody to come in as an accountant, what exactly is he going to put together for you? There's nothing. So right now the big question is, do you want a person to imagine figures for you as a business? And sometimes some questions beg my mind, and I'm just wondering that, how are you able to see how you're going as a business? It doesn't matter, you make money, money comes in, but the money will go into places that you might not know because you are not properly tracking business records. So it's important for us as a small business. 3 key things. At least we need to know how much we are making in terms of revenue, recording it properly, and also recording our expenses properly. And of course, sometimes we might not always be in business. People might be operating on our behalf. So it's important that any expense that is being made, there's an evidence to back it. There's a receipt to back expenses, because people can commit fraud in businesses when there's no proper record. When we are not keeping expenses properly, they write certain expenses for you, but it's actually not being done. Fictitious expenses can be created, and also sales can also be reduced as well. So it's important that at least we have a receipt or something. When somebody buys something, we record it, we're able to tally it with what we have in our sales record, and at the end of the day we can simply calculate our revenue. Simple records. Let's have our purchases, at least at a minimum. How much have we sold? How much did we bring in? What are some of the expenses we incurred as a business, and what does my profit look like? So when the accountant is coming in, at least he has a good picture of how much you've made, and can put together some financials for you, that even as a business you're able to see how you're growing. Because sometimes we tend to miss the line. We are making the money, but we are spending too much. We are not checking our expenses, and then at the end of the day you don't know where the money has actually gone to. So it's important to have accurate records where we are keeping what we've sold in terms of sales, what we've bought, purchases, and also what expenses look like, but of course with certain evidence back, so it's easier for the accountant to be able to check that. Now, for those going into business, it's also important for us to have some good projections, having good solid plan. What do we want to do in the next short period of years, or 5 years? What exactly do we want to do as a business? What is our vision? What's our mission? Why are we starting this particular business in the first place? Have we done some form of feasibility to see if the business will sell? Because it's really tough to do business. You start, you get in, and you realize that the market doesn't really even need that service or product you're selling. So it's important that a feasibility study is being done for you to be able to know what exactly will sell, or how you can even push that kind of product. And just to also add on, of course there are some companies who support viable startups, so not just any kind of startup, viable startup. And for viability, typical investor will want to see how your financials look like. So without me, how have you grown for some time? At least have you operated? Have you managed your limited resources? And how will you be able to manage it if I should invest my money? And that's where we look at good projections for the investor to be able to see. Now, there are also certain pitches that are being done for businesses, so we can typically watch out. Sometimes they're on LinkedIn, people come in, we have angel investors, they are looking to invest into viable startups. We also have certain centers that support green business, especially now. Most people are talking about the new kid in block, which is ESG. So we want to see how businesses are bringing in the idea of ESG, how they are also doing certain innovative ways to promote ESG within their various businesses. So typically that's what I'll just say to wrap up what we've discussed so far today.
Okay, Mr. Kumi.
All right, so I will say that Ruhaina, sorry.
Frank, don't butcher my name.
Ruhaina has made justice to the wrapping up, but I'll add that we at The Verge, we have worked with a number of investors, where they call upon us to look into the books of potential investee companies or target companies to see whether or not they are viable. As Ruhaina mentioned, and therefore if they could, put their money there. We have done quite a number of such engagements, and there are some that, upon looking through the books, we realize that the books are just cooked.
I was trying not to use that word.
The books are just cooked. They are made up.
Okay.
The figures are all made up. Even the source documents are all made up.
Oh, wow.
They go to print receipts.
Because when you tie it in, you realize it won't match.
Yes. So they go to print receipts and create fake documents just to back up the fake figures. And they are not only doing injustice to themselves, but to the country as a whole, because these investors leave with very bad impression about us. Yes, and it's a bad thing, So yes, if you're a business out there, you need help with accounting. Like I said, we are very affordable. We are actually starting
is it pro bono?
It's more or less like a pro bono, but maybe something little just to take care of, expenses. So we are initiating a program or project to help small businesses and startups to at least maneuver around compliance issues, not only compliance, but also records keeping and financial reporting. That way you are helping yourself. You're not walking about blindfolded. Okay, you're not traveling blindfolded. You can see where you're going, you can see what you're doing, you can determine the income that is coming in, the expense that is going out, and therefore how much you can spend. So resource management, right? So we are trying to put some program like that in the space so that we can help small and startup businesses
to manage their
books.
Okay, Mr.
So we have that arranged where we are also partnering with some other software companies to help give us that platform to do that for some of these businesses. And I believe if you are there, you would benefit from this.
So share it as a number they can call if they are interested in this service or pro bono, as right now we put it.
Okay, so my number is 0249 50 9391.
Okay, so 0249 509391.
Yes.
Wait, it's only on the Lord Chamber that you get this, so please take advantage of it. You are offering again pro bono financial services to our startups and our small businesses, and I'm sure it will help you a great deal. And I guess those will be your final words.
Yes, that's just final. But I think that Ruhaina will want to add.
Oh, Ruhaina has done.
When it comes to risk management, we're going to co-opt her.
Okay.
Or poach her from KPMG.
Okay. Hey, you must be very rich.
We're going to poach Ruhaina from KPMG.
Okay. So we're looking forward to see Ruhaina when we come for the pro bono services.
Yes.
Anyway, it's been good having you here on the Lord Chambers. Inti ebusia se ne yesia ne dada no o hye edwuma sie anase wa hye edwuma sie kra dada na emu usika semu no wa na wo ye o share operations o say so share accountable ha to me eye adeso akakra ma enti ehun be hia se obenya professional obi a wakọ accounting school ho kakra na owo hu nimdie a obetumi aboa wo saa kwan ne so wo saa nwuma nim na edru se obi so pese odi sika eboa we dwuma na ohu se okay wo kakra wa na wo we utumi di yesi enti ende me de kwa be kan ho dia obetumi amanenyi. As Christians, you all know we are stewards, and so for the little you have, if you're able to multiply it, that's when you get the greater ones to make it even greater. Thank you for joining us today. As you know, this is the Lord Chamber. Meet you same time next week on Hope TV. Bye.
Welcome to the consulting room.
And then there are the non-communicable diseases. These tend to be called the lifestyle diseases because the choices that we make as part of our lifestyle play a part in whether we are going to get it, how severe it's going to be if we get it, and the hope for recovery.
There are over thousands of